Welcome back to the Dinar Chronicle, your trusted source for the latest real-time updates, developments, and intel surrounding the Iraqi dinar revaluation and global financial shifts. If you're watching this report today, July 16, 2025, you're tuning in at a crucial moment in the RV landscape. After years of speculation, delays, and behind-the-scenes negotiations, we are now seeing the first signs of actual movement within major U.S. financial institutions. And today, one of the most talked-about names in the American banking system, Chase Bank, has entered the spotlight. According to multiple verified sources close to regional banking operations in the Midwest and southeastern U.S., Chase Bank has reportedly begun preparing internal systems for the eventual integration of a live exchange rate for the Iraqi dinar. Staff members at select high-tier branches, those typically reserved for private clients and wealth management, have been briefed in recent days about a foreign currency conversion rollout expected to be piloted within the next several business cycles. While the bank has not released any public-facing statements confirming an imminent exchange, internal communications suggest a level of preparedness that aligns with long-standing projections about how U.S. banks would implement RV-related protocols when the time came. Today's developments don't exist in a vacuum. They come on the heels of weeks of subtle but deliberate actions by financial institutions, both domestic and international. Just days ago, the Central Bank of Iraq reaffirmed its position on monetary reform, while simultaneously signaling its commitment to a stable and internationally recognized rate. Combined with increasing geopolitical stabilization and post-conflict economic reconstruction, many believe the environment is now conducive to a long-awaited valuation shift. And with Chase Bank now taking procedural steps, the timing could not be more significant. What we're witnessing is not a full-blown public rollout just yet, but rather a phased, highly controlled trial phase targeting a specific clientele. High-net-worth individuals and clients enrolled in Chase's private client services are reportedly being contacted for pre-scheduled consultations concerning new foreign exchange opportunities. While the currency is never explicitly named in open documentation, internal memos reference currencies tied to Middle Eastern recovery zones, a clear nod toward the IQD. Digital banking infrastructures are also being modified. Back-end updates observed across Chase's foreign exchange platform earlier this week revealed new placeholders for unlisted exotic currencies. IT teams within JP Morgan's infrastructure division, which powers Chase's banking systems, appear to have deployed a patch associated with high-security currency modules. A technical but telling signal that the system is being primed to handle transactions outside the normal FX scope. What makes today's update particularly compelling is the alignment of this activity with broader federal oversight trends. Since early 2025, several departments within the U.S. Treasury and the Federal Reserve have been quietly increasing communication with major banks regarding foreign currency liquidity stress testing. These efforts were initially dismissed as routine policy enforcement post-COVID economic recovery. But insiders now believe these actions were part of a coordinated risk management approach to prepare Tier 1 institutions for the sudden valuation of previously dormant currencies, chief among them, the Iraqi dinar. Additionally, branches located near large military bases and diplomatic enclaves, including in Virginia, Texas, and California, are reportedly among the first to activate contingency foreign currency desks. This suggests a level of cooperation between financial institutions and federal agencies regarding who might be eligible for early exchanges. This would match long-circulated theories that initial redemption access would be granted to former contractors, government personnel, and affiliates who held IQD as part of their service-based deployment packages. Moreover, we've received reports that Chase has updated its internal currency lookup tools to include placeholders for unlisted rates, and staff have been advised to reference corporate FX teams for any inquiries related to Middle Eastern currencies. This change alone would be unremarkable, unless it came during a time of heightened chatter within the foreign currency community, which, as we know, is exactly what's happening right now. Market analysts have also noted irregularities in the interbank forex space. Although the IQD is not yet freely traded on the forex market, currency speculators have reported minor algorithmic pings across AI-based rate monitoring systems. These pings typically occur when central banks begin adjusting back-end rate references or when systems are being tested for higher bandwidth execution of large-scale orders. This activity is rarely visible to retail traders, but institutional monitoring tools have picked up these anomalies with increasing frequency since the start of July. Let's not forget the geopolitical layer here. Iraq's recent completion of several IMF benchmarks, including full compliance with Article 8, gives the Central Bank of Iraq unprecedented flexibility in rate setting. Analysts believe that Iraq's willingness to service international contracts in dinars and its successful reduction of dollar dependency signal a maturity in their monetary policy that few expected this soon. With crude oil exports hitting record highs and investment surging across reconstruction projects, the economic fundamentals are aligning with the technical signals we're seeing across U.S. banking infrastructure. This makes Chase's involvement all the more meaningful. As one of the largest consumer banks in the country, any operational movement within its foreign currency division is going to reverberate across the industry. If Chase is preparing for a quiet, controlled roll-in of IQD redemption protocols, then we can reasonably expect that other institutions, such as Wells Fargo, Bank of America, and Citi, are either preparing similar infrastructure or waiting for Chase to act first before following suit. It's not uncommon for major banks to mirror each other's policies in this manner to ensure uniformity in regulatory compliance and market response. Sources within private banking circles have also hinted that a rate awareness memo is circulating among elite client advisors. This memo allegedly outlines preliminary guidance for explaining the redemption process to select clients, including timing expectations, rate verification methods, and security procedures. While we cannot independently verify the contents of that memo, we can confirm that the language being used suggests a real-time orientation rather than speculative training. That subtle shift in tone from if to when is what many longtime watchers of the RV space have been waiting to hear. This doesn't mean every Chase branch will suddenly allow IQD exchanges tomorrow. In fact, it's quite the opposite. Most branches will likely be unaware of any such process until full public release. The current phase appears to be strictly limited to private banking divisions and select executive tiers. This kind of compartmentalization is typical in high-security financial rollouts. It allows for system testing and policy refinement without causing a public rush or creating instability in the retail banking environment. Of equal importance is the behavioral change among tiered bank clients. Some private client members have confirmed unusual scheduling protocols in recent days. Appointments have shifted from standard investment reviews to longer, more discreet sessions with foreign currency specialists, an unusual move for clients with previously little interest in international markets. While these sessions have been described in vague terms, the timing, coinciding with back-end software updates and cross-departmental briefings, adds yet another layer of credibility to the notion that something significant is being put in motion behind the scenes. We've also heard from several mid-level bank employees that non-disclosure agreements have been quietly reinforced across foreign exchange departments. While NDAs are common in banking, they are rarely reiterated unless there is a change in policy, protocol, or exposure risk. These NDAs are reportedly being emphasized alongside reminders of federal oversight on suspicious activity reports, SARs, indicating that compliance departments are taking potential currency movements seriously and are prepared to document any anomalies during the early stages of the exchange process.